Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And today we're going to be taking as many queries as possible and we will be starting it from the first segment itself. But before that, let's have a look at what the markets are up to. So Cheryl, the global cues were quite positive, but it's the benchmark indices that's once again seen to be drifting in red.
Absolutely, Shrishti, a very good morning to you. And if you look at the benchmark indices, they are definitely drifting in negative territory. In fact, we have actually given up all of those morning gains. Remember, we did start with a very firm footing from the word go, but from there on, we've actually given up all of those gains. As you can see, negative territory coming in for Nifty, Sensex, as well as Nifty Bank. Talking about the advanced decline ratio, for now, it's still tilted towards the gainers. But let's see, wait and watch, and how the day transpires and which side of the fence these stocks actually move. Talking about the list of losers first, then you have Sun Pharma, that's the top loser on the Nifty, almost 4% downtick coming in for Sun Pharma. You have ONGC, LTI Mindtree, M&M, Infosys among the other set of losers. While on the flip side, you have SBI Life as well as HDFC Life among the top three gainers on the Nifty. Dr. Reddy's, Asian Paints are the other set of gainers as we speak. Talking about the sectoral indices and how they are performing at this point in time, let's take a look at what the broader markets are doing, especially the small cap index as well as mid cap index. Both of them actually are holding on to the positive territory, outperforming the benchmark indices once again. But as you can see, they are also actually given up from those days' highest point. Talking about the sectoral indices, then you have the pharma index, that's top sectoral loser, followed by IT, as well as you have some of the infra and PSU counters also declining in trade. While on the flip side is the realty index, PSU bank index, that are seeing good strength in today's trading sessions. That's the way how the markets are looking like at this point in time. Shrishti, no doubt if you look at the benchmark indices, definitely the benchmark indices are in the negative territory, but that's the way how the markets are transpiring. But let's bring on board our guests for today. We have Rajesh Agarwal as well as Hemant Kapadia joining us on the show. Very good morning to you, Rajesh, as well as Hemant. Thank you so much for joining us on ET Now. And Hemant, let me just first start with you. Take a quick check on where you see the benchmark headed from here on, because yes, we are all going to be awaiting for the FOMC meet outcome. No doubt we had Bank of Japan outcome today, but FOMC meet tomorrow will be the outcome day. But how are the markets looking like? What are the charts indicating to you, especially for Nifty and Nifty Bank?
A very good morning to you, Cheryl. Thank you for having me on the show. I guess it's too nascent. The recovery is still too raw. I believe it's going to take some more time. See, the architect of this recovery is one and only Reliance. Cheryl, if you see, from a low of 20 we posted a high of 2328 and now we've cooled off. Now, since Reliance has cooled off, market itself has cooled off. Sentiment-wise, weighted-wise, I guess HDFC Bank and Reliance are biggies. I think, if I remember correctly, both are down for almost 14-15 weeks, Cheryl. Oversold at support levels. So this is a bounce. I wouldn't say this is a rally, it's a recovery. 19,250 is technically important for the Nifty, Cheryl. If 19,250 gets taken out, I think that would be a first technical green shoot. If it doesn't, I believe we might see a cool off coming in and somehow test the earlier bottom. Then we'll get a more confirmation that are we making a higher bottom, lower bottom, or are we consolidating, or are we breaking through? So, frankly speaking, it looks like an insipid recovery, riding piggyback on one single stock. And after that, it's more specific than the market as a whole. So, I believe it's going to take some time for this to play out. I wouldn't be in a rush to do anything much, Cheryl.
Okay, not looking to do anything much at this point in time. Some cool off in the markets, and especially the cool off we have seen in Reliance. But with this, viewers, let's kickstart taking all your stock related queries. Do remember that you can connect live with us on the WhatsApp number that keeps flashing on the top of your screen, and we will try to take as many queries as possible. And kickstarting the query segment then, and the first query that I have, Rajesh, is coming in from B. Sai Babu. He would like to invest in Nestle India for the next 2 to 3 years and wants to know, is this a right time to enter this particular counter, or let the stock split happen and then he will go ahead with his investment?
Good morning, Cheryl. Good morning, Srishti. Good morning, Hemant. See, when you're talking of investment for 2-3 years, I don't think you should wait for levels to watch out. And as far as split is concerned, I think after the split, normally what happens is price goes up, maybe on a very smaller pace, but still it goes up because a lot of retail investors starts coming in and becomes affordable and all. So it's better to invest pre-split. But again, I would say that when you are looking for a long-term horizon, don't look for levels. Go ahead and buy. This is a very good company. Numbers have been very good. They have good brands like Maggie and all of them are almost doing well. I think this is one counter which one can keep for a longer term horizon.
This next query that I have is coming in from Rajesh Maheshwari. He's writing to us from Indore, and his query is on Black Box Heyman. He's saying that this stock was earlier known as AGC Networks, but he's having about 750 shares and he's been holding on to this counter for the last 30 years. Now, what he's asking is what is going to be I'm very sorry for that. Okay, he wants to know what is the short to medium term outlook for the stock, whether to remain invested or exit or add. What's your take on this one right now?
Wow, that is some patience, Cheryl. That's a long time he's holding on to. Having said that, we are safely ensconced in an intermediate uptrend. If I were to look at the longer term charts also, the technical setup is positive. We had a very deep correction from, okay, this is adjusted for bonuses, sorry, split from 350 to sub 90, and now we are trading a strong comeback. It took almost 2.5 years of a correction. So I would suggest hold. We seem set to appreciate further. In terms of support for safety's sake, I think 238 is the nearest solid support, followed by 200. So we remain in a medium term, possibly a longer term uptrend, but I'd be more comfortable medium term uptrend. Uptrend looks good.
I mean, the next query is also for you. This one is from Dayanand from Bangalore, and he has purchased 7,000 shares of IRFC, but from a price of 64 rupees. Wants to know the outlook maybe for the next 6 months. Should he continue to hold on to this one or book profits and take an exit?
Good morning, Srishti. Good morning to Rajesh also. We've entered a intermediate correction, Srishti. Support is 66. I suggest a hold. We've had a humongous run, 26 to 92. So I'm not saying we're paying a penalty, but we are accounting for this rise. Laws of gravity need to catch up. Time price retracement going on. Hold. I believe when this correction is over, we'll see a further upside. Hold.
It's from Parish. She's writing to us from Ahmedabad, and this one is for you, Rajesh. He has Zomato as well as Aeroflex. He's saying both were bought at a price of Zomato. He bought it at 111.5, while Aeroflex he bought at the levels of 159 rupees per share. He's a long-term investor. He wants to know what to do. Makes sense to stay put with both of these counters for the longer term.
See, as far as both of for a long-term holding at this point of time, Zomato as usual is not making much of a money. Last quarter only they made only 2 crore rupees. Just a nominal amount to come in black. They are still feeling pressure on their margins and all. Yes, they are trying to expand, but things are not that good. So for a long-term horizon, let the results be good, let the outcome be good. At this point of time, wait for 114, 115 and book out. Aeroflex, same valuations are on a higher side. So I would say sell at this point of time and switch to some other better company.
Okay, moving on. And Rajesh, the other query that I have is coming from a viewer. He didn't share his name, but he wants to invest in Suzlon. He's looking to invest 2 lakh rupees for the next 1 to 2 years. Okay, I think we have snapped a line with Rajesh. We'll get back with him. So let me take the next query then. And Hemant, the next query is coming from Nagesh from Bangalore again. He is holding shares of L&T Finance, 3,400 shares from a price of 138 rupees. Can he expect the stock to reach 145 maybe in the next 2 to 3 weeks? This particular query is from Anindya.
Okay, I'd like to fine tune that a bit, Srishti, if you give me permission. From 2 to 3 weeks, I would suggest our investor caller hold on change the time frame to 2 to 3 months. We are in an intermediate correction, Srishti. I'm not sure if 145 is coming in 2 weeks. It seems like a 2 to 3 weeks seems like a tall order, but yes, 2 to 3 months. Yes, I won't even say 145. I'd say we'd probably cross 150 in the next 2 to 3 months. So if he's amenable to something like this, I think hold on. The breakout comes in at 141. A weekly close above 141 would mean the first indication that his journey towards 150 has begun. 50.
All right. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And this next one that I have is coming in from Rima. She's writing to us from Pune. And she has paint stocks in her portfolio. One is Berger Paint, 60 shares, average price 544. Indigo Paints, 26 shares, average price is 1,545 rupees per share. She's currently in loss in both of these counters. Now, Hemeng, she wants to know whether she should exit or average, and if average, then at what levels?
Well, Budget Paints has given a slightly deeper correction, Cheryl, and I think it's going to take some time to play out. If I look at the longer term charts, I think Asian Paints and Berger Paints, Cheryl, both are in 30-year uptrends. So the long term picture is unequivocally bullish. But yes, we walked into a correction of a greater degree, so I would suggest have some patience. If the holding period is maybe a year or more, I think it's a hold. But if it's a shorter term time frame, I think then it's a sell on bounce. Currently oversold, a recovery seems to be underway. But if this has to make headway, a close above 585 is a must. So I say keep these levels in mind. And if it's a short term view, it's a sell on bounce.
Okay, moving on. And Rajesh, coming to you for the next query. This one is from Gauri, and I wanted to take it from you because this query is on Suzlon. Gauri is looking to invest 2 lakh rupees in Suzlon for the next 1 to 2 years and wants to know, is this a good buy at this point in time? If not, then any recommendation on the similar stocks? I'm not sure what similar stocks means to her. Maybe it's a power stock or a stock which is trading at a lower price, less than 50 rupees. So what's your advice for Suzlon specifically? Is that a good buy at this point in time given the run up?
I don't think so. I don't think Suzlon is a buy or a hold for a longer period of time. Yes, the company has reduced debt, doing some major expansion and all, but still, I think all these stories will take time, and I don't know how far it will go. Every time when the market runs up, these kind of stories start coming in. So I'm not very skeptical about that. It's better to invest in a good company. Like if you're looking in power stocks, I think Tata Power or a CESC are very highly undervalued at this point of time. You wouldn't go ahead for that. Or for a longer term horizon, if you want to go for with some less risky stocks, you can go for Reliance or HDFC Bank, where the valuations are extremely good.
This one is for you, and this one is come from Karthik from Chennai. He's saying he has Biocon December futures at 255. He has Bandhan Bank December futures at 253. He's saying both are in heavy losses. He wants to know what sort of short-term target should he keep for both of them, or whether he should go ahead and book losses for both of these counters.
Firstly, a small piece of advice, Cheryl, to retail investors: please keep a stop loss. Your risk reward ratio should be 1:2, if not 2.5 for positional trades. And I think before entering a trade or identifying a target on the upside or a short position, whatever, please keep a stop loss in place, because that way your capital gets protected. Having said that, coming back to Biocon, unfortunately, he's bought both the stocks which are in intermediate downtrends. They gave downward breakouts, and Biocon was a little bit of a surprise. It broke 258 and has gone very sharply down. So the situation is still not very copacetic. It looks weak. There is support at 218 and longer term support comes in at 211. So frankly speaking, it's a difficult call to give at this point in time. Firstly, he needs to keep a stop loss of 218. Please note these are cash market level, not future levels. So keep a 218 closing level stop loss at the moment. It's oversold, I believe, but this is based on intraday charts. I believe a recovery or a bounce is around the corner. if this bounce has to get a bit more acute, we need a closing about 226. And if it closes about 226, it can be 234. That's where he can exit or book losses because the charts have taken a hit. The structure is being damaged. It's going to take some time to play out positively, I feel. Bandhan Bank, similar story. It's fallen off a cliff. Same story, levels broken, downward breakouts, support at current levels, oversold, bounces underway. Please keep a closing stop loss of 211 cash market, and a bounce should take it to 225 or max 228. So that's where you can book a loss. It's going to take some time, and I don't see any technically compelling reason for him to hold on beyond a point in time. But since we are oversold, a bounce is around the corner.
Okay, moving on, and Rajesh, the next query is coming from Dasa Radhi from Vijayawada. He wants to buy Zensar Technologies as well as JSW Energy, 300 shares each at current market price. What's your advice going ahead? Should he go ahead and make the investments in these names?
Good stocks for medium to long term. By medium to long term, I think 12 to 18 months would be optimum time horizon for this. And both are doing well. The numbers have been good. Fundamentals are strong. Zensar belongs to Sanjeev Goenka Group. The numbers in the past few quarters have been very exciting. I think both of them can be bought.
This next question that I have is coming from Yogarani, and she has 1,500 shares of IDFC First Bank and 92 rupees per share. She wants to know whether she should average at current levels or what should she do at this kind of juncture. Heyman, what's your take coming on IDFC First Bank? No doubt this one has seen quite a correction of late, isn't it?
Absolutely, Cheryl. It has seen a correction of late, and 52 to 101. This is the move that we are retracing in terms of time and price, Cheryl. So this might go down further if he's going to average. I believe the level to average is 76. I don't think it's possible to get tops and bottoms. So one would probably need to spread out his purchase, sort of keep it in a sort of installment sort of a thing. 80, 76 and 70. I don't think 70 is on the horizon unless there is a major reversal in the market. So 80 and 76 are two levels which are support levels, can be used to average.
Welcome back, and let's shift focus to some of the earnings then, and we will talk about Marico, which has come out with an inline set in Q2 FY24, but coming to a surprise, the company has upped its margin guidance for FY24, and as you can see, the stock is also holding itself in green. So let's understand more from the management that what is the outlook going ahead and what are the triggers ahead. With this, let me welcome on board Saugata Gupta, MD and CEO of the company. A very good morning, Mr. Gupta, and thank you so much for your time. Firstly, the company has upped their margin guidance for FY24. So two-part questions. What are the factors that are leading to this particular move? Where do you believe that the margin improvement in FY24 could be 200 basis points versus earlier guidance of 150 basis point? Is that on the back of the softness in the RM cost only? And also, are you confident, how much are you confident about the sustainability of this margin levels going ahead?
You know that our entire focus is to ensure that we maximize volume growth and market share subject to a threshold level of margins. And in the past, we have defined that threshold as anything between 19 to 20. Some of the years it has obviously crossed 20, and this year we are going to deliver a number which could be one of the highest in our history. Now, the combination of two things have happened, I think, as far as margins is concerned. Yes, there is some raw material tailwind. There has been significant efforts which we continue to do to manage costs and obviously spend effectiveness. And we have introduced significant amount of analytics into our spend effectiveness drive. The other thing that has helped is that, we have focused on two things. Namely, first is, as you know, that in the food business, which we had scaled up from 2020, and foods plus digital plus premium personal care today form 20%, which is our almost a significant portion of which is a new age portfolio. Now, there has been considerable effort to improve the gross margin on foods, because if foods is one of the big drivers of growth, we have to get a margin. Although I must say foods makes much more margin than Saffola edible oil, but it still doesn't make as margin as the rest of the portfolio. And therefore, that was something which we worked on. The other one which we worked on in a very focused manner was to improve or reduce the cash burn rate in digital brands, which has also happened. So it's a combination, I would say, of four things rather than this, and we pulled this off despite significant currency devaluation in some of our international markets, which impacted obviously our, as far as translation losses are concerned.
But Mr. Gupta, the cool off in the RM cost, aren't you looking it to pass on to the customers, the price cuts, which might help to recover volumes for you?
I think we have already taken price drops, okay, in Parachute and and also Saffola, because both are in terms of the price premium sensitive. We are also taking tactical calls in terms of whether we have to do on pricing, consumer offers, and all that. As I said, that I think it is a combination of. You are absolutely right that we have to have the right price. I believe that we have a right price of the market in the market, and as you know that as we enter the off season for copra, it is obviously there will be a slight inching up happening, and therefore I believe that we now have the right price in the market. Also, I think we have to be also careful in the sense that just pricing might not be the lever right now, because ultimately consumption will happen as the overall system recovers, and we believe that we are seeing a rural recovery which will happen in the second half of the year.
Right. Good morning, Mr. Gupta. This is Shell also joining in the conversation. Let's talk about the rural recovery. Are you witnessing a rural recovery, particularly for your company? If you could provide some update on that particular front. Also, to add to that, if you could tell us how are the demand trends shaping up? We are already in the Q3 period. So how is the demand trend now shaping up for the quarter that we are currently in?
Things had started improving in July. Now in August, there was a kind of insufficient rainfall, and that had led to some kind of uncertainty, and therefore August and at least the first half of September, we had seen again some kind of a demand slump. It's improving right now. Now, if I look at the FMCG consumption, I would say that the fact that most of the people have reported around this 2%, 3%, anytime very low single digit growth. But if you look at the Nielsen numbers, it's indicating that the volume growth is slightly higher. I think it's a combination of 2-3 things. One, obviously, there is rural stress. The second thing, what has happened is a lot of small players have come back, and they have, I think, taken now, whether Nielsen, obviously, that pick up for small players who are regional and they may not be the most perfect, that would have happened. And the third thing that has happened is that, as you know, especially in urban GT, given that that there has been revenue pressure, and this is with respect to us and could be for others, I don't know, but with respect to us, costs go up, revenue goes down. So obviously, the credit in the distribution system's ability to do credit in the system reduces. That leads to a slight loss of STR. The STR loss has also happened because in a falling commodity market, people expect price drops, and therefore retailers tend to stock less. So in most of our core categories, we have also seen a STR drop in retail. So I think it's a combination of all three. Now, one good sign that has happened this quarter is that for the first time we see offtakes picking up, and offtakes are higher than sales.
You did actually mention over there that you've seen some sort of increased competition, especially from local players. If you could elaborate a bit more on that particular front, if you could tell us from which segments are you seeing this competition actually surface, especially from the domestic players?
No, I think, if you look at it, I think some of our growth drivers are from conversion from unbranded to branded, or getting share from small players. Now, what happens is that during COVID, obviously, because of supply chain, lack of supply chain agility and other things, their ability to, I think a lot of small players had either folded up or were less active. As food inflation started and overall inflation started, there is obviously a tendency for consumers to downgrade or titrate in FMCG. That's the time they came up. See, I would also say that that conversion from unbranded to branded or upgradation stopped. Rather, I think consumers started downgrading. Now, two things will happen. As we believe that now the rural, the thing will become stable. Number two, I think starting now, the copra especially, which contributes significantly to our commodity basket, will start inching up. Some of the raw materials will start inching up. That will ensure that organized players will again become more competitive, because we don't immediately pass the costs into the consumers. So I think this phenomena will slowly reduce.
Okay, Mr. Gupta, looking at your internals, what we can spot is Saffola saw another quarter of over 20% revenue decline. Do you see this continuing through the second half of FY24 as well?
So Saffola has a low single-digit volume growth. The reason Saffola is showing a negative revenue growth is because of the fact that if you look at Saffola, and let's take a price of gold, Saffola gold, it had gone up post-Ukraine in last year to $230 a liter. It's today at 160, 155 to 160. So there has been a significant deflation. The deflation is causing the revenue loss and not volume. Volume is positive. Now that anniversarization will slowly start happening in Q3 and Q4. And overall for our business, revenues which have lagged our volume growth, that will get rectified. And I think in Q3, Q4, you will see revenue growth in line with volume growth. And then it will start maybe with a slight increase next year. As we go into Q1, you will get some inflation-led gains.
All right, thank you, Mr. Gupta. We leave it there. Thanks so much for joining us on ET Now to talk about the quarter gone by for Marico, as well as the reasons why actually y'all have gone ahead and upgraded the margin guidance. That was Mr. Saugata Gupta of Marico. But yes, viewers, we will continue taking your stock-related query. Firstly, thank you so much, Heyman, as well as Rajesh, for standing by and waiting by patiently. Let me take this next query that I have. It's coming in from Usha. She's writing to us from Hyderabad. And she wants to know actually what's your view on Woodward Wizard innovation and its significance in the EV segment. I'm unsure if you track this one, Rajesh, by any chance. No doubt she's asking for the short term. It makes sense, or for the medium term to make sense to take position in this particular segment or stock. But given the fact that she's asking the significance of this particular counter when it comes to the EV segment as a whole, what's your take on it? How's the fundamentals of this one, if you track that is?
Which company you said?
Woodward Wizard. Ward Wizard. Sorry.
I'm sorry, I don't track this, but as far as EV sector as a whole is concerned, I think it will take some amount of time when EV is fully there in our system. And I don't think ICE sector is going out of it anywhere in the next few years or so. So I would better be invested for a longer term horizon, I would say, in Bajaj Auto or a Maruti, rather than putting full focus on EV. So although I don't track this, but as a whole on a EV segment, I can say that ICE is going to be there. And why not invest in Bajaj Auto or Maruti?
Okay, moving on to the next one. And Rajesh, once again coming to you, because this query is on two aviation counters. Firstly is Jet Airways, where Krishna Kumar from Kochi is holding 240 shares, but from a price of 100 rupees. His another counter is SpiceJet, 600 shares, but from a price of 60 rupees, sitting at a huge losses in both of these. And now wants to know, is this a good time to average out these particular counter, or should he just book out losses and move out of them?
See, there is no question of averaging out at this point of time. Both these companies are in a bad shape. Coming to Jet Airways, the operations has stopped. I don't know why people buy when there is no operations at all for the company. It's better to book out losses in that. But there are no hopes as such that the things are going to be better in the near future. As far as SpiceJet is concerned, I won't advise to add at this point of time, but one can hold this stock for maybe a target of 40-42 rupees in the next 2-3 quarters, but no addition is advised, because as it is, the company is reeling under debts. The numbers are pretty bad. PL factor is not going anywhere. So it's better to stay put, wait for 40-42, book out there. No additions are advised.
All right. This next one that I have is coming in from Ananta Krishnan. Ananda Krishnan is writing to us from Madurai, and 100 shares of Dalmia Bharat at a price of 2,088 rupees per share. Heyman wants to know the short-term prospect for this particular counter.
Short term is it's a little bit of a repetition of what we've spoken earlier, Shell. It's a bounce, a recovery, not a rally. Oversold, cool off from 2370 to sub 2000. I believe we run into heavy weather at 2120. So it's going to take time. So currently it's just a bounce. We'll have to wait for it to settle, and that settlement could come after it tests last week's low. Wait a bit, nothing yet constructive active.
Okay, Himen, the next query is coming from Omkar, and he's holding 100 shares of MTAR Technologies, but from a price of 2,800 rupees. What should he do? Continue to hold on or book losses in this one?
I would suggest to hold a little bit of a caveat because I have limited data. Limited data in the sense I have a couple of years. Probably that's not enough technically to take a longer term view. But unfortunately, managed to buy it in the proximity of its all-time high. We walked into an intermediate correction support at 2,800. The long-term setup still seems bullish the way I see it. So I would suggest to hold. For safety's sake, please keep a stop loss at 2,300. We need a close about 2,850 on the weekly chart to resume its up move. I believe the structure is positive, could take some time to play out. Hold.
This one is coming from Yuvraj. Yuvraj has actually kind of addressed Shrishti as Shruti. For a second, I was wondering whether I'm taking a query from Yuvraj or Shruti. But yeah, this one's from Yuvraj. He's writing to us from Chennai. And I'll take this one to you, Rajesh, because he has SW Solar, 2,000 shares at a price of 360 rupees per share. He wants to know whether he should hold, average or exit this particular counter. But he's a long-term investor. So if he's a long-term investor, what's your take coming in on SW Solar?
See, SW Solar has seen bad days, but the things have started improving, and I think it's just a matter of time that when things start improving and the price shows some kind of gains. So it's no point adding at this point of time, but for your existing stock, you can continue to hold.
Okay, that's the take coming in on SW Solar. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your queries. And I actually had a couple of queries right now on Siemens. One is from Padma Siva Rao. He wants to know whether it's the right time and the right price to enter Siemens. The other one is from Krishna Kumar, who wants to know about Siemens, whether to buy Siemens today. Heyman, all these questions directed to you, but I will also want to take Rajesh's take on Siemens, because the fact that you have news reports indicating that Siemens Energy is likely to sell its stake to Siemens India is what the reports globally had mentioned. But Siemens today, do you think, Heyman, yes, there may be news flows that are impacting the stock price today, but what's your take? Do you think today is a day to invest in this name?
Or if one likes the stock fundamentally, I would say if you do want to invest today, invest 1/3. Don't go the whole hog. Wait a bit. Technically, there is weakness which has creeped in Shell, and I don't think it's just going to get shrugged off and stage a U-turn and start moving up. So the next support level comes in at 3,139. That's where the other bunch of buying can be done. So I'd say you can spread your purchases like an SIP. Once again, I think Rajesh can give the sound fundamental advice. Spread it out, buy it in 2-3 lots. Maybe today is the first lot. Once again, it looks like it's set for a further downside, notwithstanding a dead cat bounce. Check.
Right. I stand corrected on that news flow, and Rajesh, what the news reports are actually indicating is the fact that sources have told via agencies that Siemens Energy is considering selling a large part of 24% stake in Siemens Limited to the former parent, that Siemens AG, in this order to shore up their balance sheet, that Siemens Energy. We know that Siemens Energy is going through a very rough patch of late, and the fact that they will look to sell their stake in Siemens Limited to the former parent, that also could be impacting the stock price today. But keeping these news flow aside, fundamentally Siemens still pretty strong? I think we snapped that line with Rajesh. We will try and take that take on Siemens from Rajesh in a short while, if time permits, that is. But let me take this next query that I have, which is coming in from, viewers need to mention their names while writing to us. We'll not be able to direct them to you. But Santosh Amin from Mumbai wants to know about New Gen 100 shares at a price of 1,127 rupees per share. Heyman, he's saying that he's wanting to hold the stock for the long term, but do you think it's advisable to do so?
Yes and no. Yes, no, because I have data from 219. I'd ideally need at least 5-10 years, at least 10-15 years of data for a longer term view on charts technically. But whatever data I have, stock is very clearly in a mature uptrend, Cheryl. I don't think there's any cause for concern. Yes, the stock has multiplied or gone a manifold from a low of 300 in December 22 to 1234 just last week. So somewhere there's going to be a catch up from the laws of gravity. So hold as of now. Very clearly the setup remains a bit, but yes, a time price correction could be looming around the corner.
Right. Actually, Rajesh, if I have you back and if you've heard the news flow, actually I corrected myself because the news that is coming in agencies is that Siemens Energy is looking to sell large part of its 24% stake in Siemens Limited, that's the Indian listed entity, to the former parent of Siemens, that is Siemens AG. Keeping this news flow aside, fundamentally, do you think it makes sense to invest in Siemens, or do you think this news flow will hamper the prospect of the company if there is a stake sale or a change of hands in that particular domain?
See, you said it right. If I leave this news flow aside and look at the company's fundamentals and the kind of workings it's doing, I think it's phenomenally good. The kind of capex announced by private sector and public sector is going to give boost to the order book going forward, and the company is doing very well. With the kind of company Siemens is, the kind of sector it is in, it would not be prudent to look at quarter to quarter numbers, but have a long term horizon. For a long term horizon, I think 3,000 would be a very good level to enter for maybe 2 years down the line. I won't be surprised if 20-22% CAGR returns is there. So it's a buy from our side, but let it settle around 3,000 odd levels.
Okay, moving on, and with this, let's kickstart taking all your queries in the rapid fire session. And the first query is for you, Rajesh. This one is from Sarita K, holding 1,000 shares of Birla Soft, but from a price of 460 rupees. And given the concerns in the IT, would it make sense to hold on for the next 1 year or book profits at this point?
It's a hold from our side, target 580.
Right, keeping in mind the festive season, wedding season, advisable to buy gold stocks that like Senco, Tangamail as well as Kalyan Jewelers. Rajesh?
Senco looks good.
Okay, Heyman, what's your view on Z Entertainment? Sridhar wants to know, given all the news flow, is this a good time to enter this particular counter? How is this one making on the charts?
Intermediate correction, buy on declines, stop loss at 234, close about 266 would mean upside.
Right, this one is also for you, Heyman. Chennai Petro, PV Rao has bought at 600 rupees per share. What sort of a target or stop loss?
Stop loss 543, target 610, 640.
Rajesh Krishna is holding shares of Dr. Reddy's from a price of 4,700 rupees. Can he go ahead and add some more at current market price? Okay, I think we have snapped the line with Rajesh again. Heyman, any view on Dr. Reddy's then?
Stop loss 5,200, upside 56 and 57, intermediate correction, downside of his limit.
All right, Quest Corp is the stock name, Heyman, and this one is for you once again. A viewer has not mentioned his name, but he wants to know with any chance of the stock reaching 550 in near term.
Near term, no. Medium to longer term, yes.
Okay, Heyman, what's your view on Thomas Cook? Chandrasekharan holding 1,000 shares, average price is at 55 rupees, can continue to hold on for the next 6 months.
Please hold on, look for a price target of 1 or more, setup things.
All right, Elecon Engineering, Heyman, 25 shares at 390 rupees per share. Subramanian Padmanabhan wants to know what should he do, hold or sell?
hold close above 855 further upside.
Okay, but with this, viewers, it's a time's up on the rapid fire session as well as on the Buy Now Sell Now show. Thank you so much, Hemeen and Rajesh, for joining us today and helping all our viewers resolving their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.